Welcome to the Get Real Podcast, your high-octane boost of full-on reality therapy for personal, business, and investing success with your host, Ron Phillips, because somebody's got to tell it like it is.
Hello, and welcome back to the Get Real Podcast. I am your host, solo, Heather Marchant. Ron is out of town. In fact, out of the country. I'm sure he'll debrief all of you on the magic that his trip, but he's gone for actually a few weeks. So I am solo today, and I don't mind because I have a great guest that I'll introduce you to in a moment. I had a checkup today, just the annual physical at the doctor. And I had scheduled that like well over a month ago, super hard to get in, which was crazy. But I had got some blood work done. So if you're watching the video, I have some evidence that I have some blood work that was just done in the last 40 minutes. But what it made me think of as I was driving away from the doctor's office was the importance of just checking in, right? I mean, I don't have any major concerns. He took my blood pressure and it was right in line, and he did a blood draw for cholesterol and thyroid and just kind of some basic stuff. And I was reminded of the importance of just checking in and understanding how things are going with my body, right? And making sure that I don't miss any warning signs of some kind of something. I don't even want to give it a name, but I think it's important in your real estate portfolio as well. And we're going to get into that a little bit today. But we offer what we call internally an annual review that you can just assess how things are going on your current portfolio. We offer this for our clients. It is free. And we do a little assessment of the current market value and the return on equity, just how things are going overall. But we also check in and solve some problems that sometimes the clients didn't even know was a problem. They'll just bring something up and I will respond with, well, you should try this. And I think you should ask your property manager that. And if there's a tenant that is late paying rent every month, is just a really simple example, then I'll say, well, is your property manager giving them posting notice, pay or quit, is your property manager doing that? And they'll often say, well, I don't know. I'm like, well, that would be a really good question for your property manager. And we both go away from these calls with what I call homework. So probably because I have young kids, that homework is life. So so that's part of our conversation today, because there's a new tool in our tool belt in these annual reviews that my team's super excited about, because it just gives clients an opportunity to potentially tap into some equity that even a month ago was not a possibility. So welcome to the show, Brendan Kolesar, our favorite lender. He is our preferred lender. And I'm just going to touch on that for just a minute, because I think that when you're in the industry, preferred lender makes a whole lot of sense. And when you're not, it feels like a gimmick, right? So just touching on it for just a second as to why we have a preferred lender. And I've talked to Brendan on the show. This is probably your third or fourth time being on the show. Yeah. Yeah. It's really helpful to have a lender that understands investment properties. Number one, they get the game. They understand the loan products, right? Because they're different, right, Brendan?
Totally.
Yeah. I mean, yes. Having a lender that can look at complex client assets, right, or portfolios, or business owners, things like that, because those are typically the people that are buying rental properties. I don't know if you have an idea on percentage, but I would assume roughly half of our clients are a little bit complex to qualify.
I would agree. I was going to say about 50%.
Okay. So having someone that understands ways. So I'll give one example that most people maybe aren't familiar with is being able to use the property you're buying if there's already a lease in place that you can count the rent to help you qualify, right? Things like that a typical lender that's helping people buy their primary residence is not going to be as familiar with things like that.
Right. Yeah. Even more so when people try and do simultaneous purchases, that's where it gets a little dicey, and just understanding the nuances for sure.
Yeah, true. Because you guys will call us and say, okay, we got to close this one first. Then we need to like a whole strategy and plan.
Oh, wow.
So your purchases aren't blown up and you don't lose earnest money or whatever, right? So having someone that gets the game, number one. Number two, I would say, and Brendan, you can add to my list. But number two, on our team, having one point of contact is invaluable. So helpful to streamline communication, prevent mistakes. And then oftentimes if clients want to work with their a one-off lender from our perspective, they don't communicate with us very well. And so the client has to spend a lot more time just grabbing information for their lender. You guys know what to come to us for and what to go to the client for. Another thing, I'm just coming up with this on the fly. I don't have notes. Another thing is we just talked about just this morning, Brendan, that you have an appraiser panel set up. So we have qualified good appraisers who aren't just going to take comps from that are 2 years old, I think was the example that you just barely gave me, maybe a year and a half. But having someone that knows what they're doing and does a good job, giving a short list to make sure that those appraisers do a good job. And this isn't that the appraiser overvalues properties. It's that they get good comps and do a good job.
Understand the area, definitely.
Yes. Those are just probably just a few ideas, but that's why when we met Brendan and saw that we aligned really well in core values, aligned really well in our expectations of how we treat our clients, things like that it became really easy. And we were so super excited. So our clients love you.
That's a great list. I mean, we try and make it as pain-free as we can. And I always explain to the folks that you were touching on that have, an S Corp that owns 9 LLCs and all of that stuff, that we're going to take really good notes in our CRM so that when they come back to see us, the second or third time, we're not ripping back all of those layers and, peeling that onion again. The first time might always be a little difficult just to kind of help us understand their business structure. But once we've done that, I mean, it should be fairly easy. I mean, we'll update a tax return if enough time has passed and update the assets. And, we know what they're trying to accomplish. So, those long-term relationships are really what I've always focused on building my business around and just, making sure. I mean, I've had the same gals working with me now for almost a decade. So, I mean, they know everyone almost as well as I do, if not better in some ways. And we'll joke around about it sometimes about just the details that we can remember about, people's lives and their income and all the transactions they've done with us are almost gross. Cause sometimes I'll forget, my dad's birthday, but I can remember, when so-and-so bought X property. So anyway.
Yeah, that's a really good point. Cause I forgot one, Brendan, that you are licensed in multiple states. So if you're buying property in 3 different states, you can help clients with all of those, which is awesome. And being able to
18 now. Yeah,
that's amazing. And supply it to one person that can help you long term. I mean, it's a big ask usually that you have to do and say, hey, can you send me all of this information? And to only have to do that a handful of times, to get all the details together is awesome and powerful. So. Well, that was like the longest intro of all time, I'm pretty sure. But
that was a good one.
Sometimes it comes to my brain and I just roll with it. But I think that that's something in the past I probably is like a first-time client would have said, like, why do I have to use your lender? Like, what's in it for you guys? Right. And make that assumption. And it's just definitely not that way. So what we wanted to talk a little bit about today, Brendan, you reached out to me a couple weeks ago and said, hey, we have this new loan product or a couple new loan products you've brought up to me in the last maybe 60 days, but some new loan products and offerings. If I remember right, Ron and I about a year ago on this show said there's going to be some new products. Like there has to be some creativity with what's happening in the market. So tell us what you're finding and what you're seeing.
Yeah, I mean, the most recent for us, and I mean, it was so easy to kick it down the middle of the field for everyone over the last few years, right? But as the market's changed and the cost of things have changed. Everyone's had to get a little more dynamic and really widen that net is the term I've been using recently. So, I know, traditionally, as everyone's looked into ways to buy real estate, a lot of your clients, their idea was, hey, I'm going to take out an equity line of credit on my primary residence and I'm going to use that as down payment money and really leverage the equity in that property. And I would say, 7 times out of 10 initially that was working. And I feel like that percentage has dipped a little bit as the prime rate has increased. And as we've seen, equity line payments or equity line rates now up into the, 10% plus, depending on who you're talking to. And I don't even know that it's necessarily where they're at now. I think it's more the fear of what they're going to do, right? Is the government going to keep increasing rates to try and quell all these other issues that we're having with inflation, which means that payment would continue to adjust. I mean, if you had a HELoC, in 21, that payment's, 3 or 4 times what it was then, that you're paying now. And I think people are afraid that could continue to happen. So, in that same breath, what we've been kind of waiting for to come out with internally, and it just so happens that we came out with one at the exact same time as one of our non-QM investors came out with one, which is pretty cool. And I'll explain why, but we've come out with what's called a HELoan. So it's a second position lien that doesn't adjust. It's a fixed rate product. We can do 30, 15, and 10-year terms on it. I don't know why anybody would do a 15 or a 10 unless they just really, my goal would always be to do the 30 and then pay it down at a faster pace on your own recognizance. But anyway, it just gives people the security to know that, what that payment's going to be. You borrow the money, you know what the payment's going to be. It's not going to adjust. It's fixed. You can pay it down faster if you want to. There's no prepayment penalty, and the terms are pretty favorable. I've priced 2 last week against an equity line, and the fully amortized payment was actually cheaper than the interest-only payment on an equity line on both of them. So both of those clients decided to go with a 30-year fixed HELoan option.
Wow.
And just some nuts and bolts, we can go up to 500,000 to a certain loan to value. I think that's 80, and then we can go up to 90% of the combined loan to value of the property. So not that anybody's going to do that. That's still an option though, in case someone needed to. Wouldn't be the first time I'd seen it, but it's not the most frequent because there's some heavy adjusters up higher in the higher CLTVs. And then, another exciting part of this is we can actually do these on second homes and investment properties, where an equity line on an investment property was really, really tough to come by. There was a few products that bounced around for a while and, never really grabbed hold, but this is something we can do up to 70% on the investment property. And that's on our in-house product. I actually can go to 80% with our non-QM investor. And we can do that with DSCR income as well. So if the property is qualifying, if you got a really low, you bought an investment property in 2020 and your rate's sitting at 3%, you've got a bunch of equity sitting in that property, you could go grab one of these, average it out with the first. And as long as the debt service coverage ratio is still 1-to-1, you can qualify that way. And I don't even need to use traditional income.
Wow. So let's break that down for a minute, because most people may not understand that DSCR component. So why is that exciting that it works with DSCR income?
Well, in a lot of instances, when people are looking to buy investment properties and they are self-employed and, their tax strategy doesn't show a lot of income, what we're doing is qualifying them just with the property. So a DSCR loan is debt service coverage ratio, which whenever I bring that up on a conversation with one of your guys' clients, I always tell them the property qualifies because all of your guys' properties are structured to cash flow, right? So effectively what we're doing is just taking the income that the property provides and then offsetting the mortgage payment. In this instance, it'd be the principal and interest on the first, your property taxes, your homeowner's insurance, and then the principal and interest on the second. And as long as the rent and that total was 1-to-1, you could qualify for that second position lien without having to worry about your income or document anything. And in a lot of cases, knowing that you wouldn't qualify anyway in a more traditional route.
And you said it's 30-year?
30-year fixed. Yeah.
What?
Yeah.
Wow. Okay.
Yeah. Pretty crazy. Where your traditional HELoC, for those of you that don't know, is a 30-year loan. The first 10 years, you have an interest-only option. And then after 10 years, it becomes a fully amortized 20-year loan, but still adjusting based on what Prime's doing for all of that. So, in this market, that's an upward adjustment. Maybe 25, we'll see a downward adjustment in Prime. Who knows? But, that fear is what I feel like has kept people from really accessing the equity that they've wanted. So I'm hoping that this will, it'll help with some conversations and just knowing rather than, being afraid of what could happen and knowing what that payment's going to be.
Yes. Like tapping some resources that were previously like you just couldn't do anything about besides sell the property. Like that was right. That was the end all be all. And our annual reviews for, a couple of years, I've been saying, well, you really can't, you can refinance, but rates have gone up since you purchased. So I'm not sure that's a great solution. And then you can then just take and sell the property. That's kind of what everybody's been doing because it's been mainly the only solution. So this is exciting. That's awesome.
Yeah. I mean, the cash out option is pretty ugly. When you combine that with the non-owner aspect, I mean, this is definitely a better avenue. And I think the numbers are really going to help people make some of those purchases that they've been considering.
Yeah, exactly. I'm already like, my brain is busy right now with all the people that have come to me in the last few years and have just said, well, I don't really want to sell, but I really want to use this equity. And so this is a solution we didn't have before, which is super exciting. So if people are interested in getting started, what's the best way they can get in touch with you?
I would shoot me a call or an email. I don't know. You want me to rattle those off on this? This mess? Okay.
We'll
so my phone number
too. So
my phone number is 916 area code 541-1808. So 916-541-1808. And my email is my name, Brendan, Brendan .Kolesar, KOLE as in Sam, AR at guildmortgage.net. So it's guildmortgage.net. Yeah. And happy to work up some numbers, respond to anybody, have a conversation. Ironically, I've gotten 2 calls from RP Capital clients this morning who just want to chat about rates and pulling out equity. So this will be when I get to call them back here this afternoon, this will definitely be on the tip of my tongue.
Yeah, it's exciting and refreshing to have options. So as far as our team and getting in touch with us, we can connect you with Brendan. So if you didn't have a pen to write down that number and you're listening in your car, you can always reach out to us, invest@rpcinvest.com. We also have a link on our website that you can request an annual review with one of our team members. We call ourselves investment property consultants. We'll go through your portfolio, answer questions that you have. It's typically a 30-minute call. You can request that on our website. So it's rpcinvest.com/annual review. There is a hyphen in the middle. So annual -review. Or annual -review. So you can fill out a quick form there, tell us a little bit about how we can help you. And if you purchase property outside of our company and still are wanting to do an annual review, we're happy to help you with that. We do those all the time, but we will need information on your properties in order to do that. So you can supply that in that form. We're happy to meet with you. Those are actually really fun. I've been doing them a ton this year. Just met with some clients just last Friday and went through their portfolio. And it's always fascinating because they had a couple properties that were just frustrating, right? Like for various reasons, but mostly a tenant that destroyed the property on one of them, right? And but I went through and said, hey, have you sent those? Have you kept track of those? And have you seen if any of them you can write off, as capital expenditures? And just ask your accountant this or that question, those kind of things. And then when we pulled the full analysis of their, I think it was 7 properties, massive amounts of equity growth, massive. Wow. And when we pulled their cash flow numbers, I was shocked. They're like, yeah, our rents have gone up on just about every property. And most of them, it didn't even make sense to sell as far as return on equity, despite them having a lot of equity. So those annual reviews remind us of the good news, because they came into that call going, let me tell you about these 2 properties. And in the end, we were like, okay, that one property, we can look at selling because the return on equity is under 5%. But the rest of them, let's keep for right now, unless things change, and let's check in 6 months. So having those calls to refocus and have a little wide lens on what's happening in your portfolio is invaluable. So reach out to us. We'd love to help.
I might have to sign up for one of those.
That's true, Brendan. We do need to do that. we talk so much that I forget that we should probably set aside some formal time. So
be interesting.
That's right.
I'd love some amazing news.
Yeah, everyone likes amazing news. Hopefully all of the annual reviews have amazing news. But honestly, the property values going up and rents going up and everyone having bought at low interest rates, it's been really fun. So thank you, Brendan, for joining and going over all that. Absolutely. That's really exciting.
I appreciate it.
So,
yep.
Also amazing news. Well, we make sure this week that you go out and make something happen, you guys. Schedule that annual review. Reach out to Brendan if you have the property with some equity that you want to just explore, get some numbers from him. Just go out and make something happen this week. Thank you.
This has been the Get Real Podcast. To subscribe and for more information, including a list of all episodes, go to getrealestatesuccess.com.